This video is not financial advice. Consult a professional financial advisor if you intend to make any moves contained herein. This video is for entertainment purposes only.
What leaps options are, it's just basically a play where you would purchase options really far out, and there's different definitions of what would you call a leap option. For me, anything that's like a year out, I would kind of consider those to be leaps. Don't worry about the term, it just means really far out options. So today we purchased some 300 strike price calls into 2022. So what that means is we are basically buying the right to purchase Tesla shares at $300 into the future. I believe the price that we were aiming for was around $180 like for the week, and today when we woke up we saw it dip to 167, so it was really a good opportunity for us to buy those. What that really means is we are paying 170-ish dollars per share for the privilege of purchasing Tesla at $300 anytime from now until January of 2022. What essentially that means is our break-even point is close to $470 on Tesla. Do you understand what I'm saying?
Yep.
So why do we do this? If you purchase the shares outright today, you're paying $420 per share, right? When we do it this way, we're spending only $170-ish per share, so to speak. If we're really bullish on the stock, we have no qualms about it reaching $470 by 2022. So in essence, rather than spending $420 per share, we're spending $170 per share. And I believe on these calls, the delta is 0.81, something like that. Correct me if I'm wrong, Dre. I think they were like more than 0.8. So what that means is for every $1 that Tesla shares moves, this call moves by 81 cents. So while you're not getting like 100% of the price movement, you're getting 81% of the price movement, which is pretty good. In essence, we're leveraged close to more than 2-to-1, closer to 3-to-1, not quite 3-to-1 yet. But using the same amount of money, we are able to potentially profit more, right? So if you have the same amount of money invested into, in this case, Tesla, you have the power of more than 200 shares versus 100 shares.
Okay. Yeah.
Does that make sense?
Yes. So then, if by 2022, if that price goes up to like say $600, then you profit a lot, then, right?
You're profiting off of more shares because let's say you only had $42,000 to spend today. You could have purchased 100 shares of Tesla. In that case, if it goes $600, you will be making $180 a share, which is $18,000, right?
Yeah.
If you just bought 100 shares. But because we have calls, if you bought 2 calls for even less than $42,000, today it would have cost you $35,000, right? For 2 calls, you can potentially be making double that $18,000 you would be making. You know, your profit would be like it will be like $36,000, but that's only if you don't count the delta, right? But there at that point, options, these calls will be so far in the money that your delta actually would approach 1. Because like when your calls go deeper into money, it actually approaches delta of 1, where the entire value is intrinsic value, right? It's really about a game of leverage. However, you know, the risk about this is if Tesla shares fall below $300, then essentially your call could expire worthless. So you don't own anything at the end.
Right. Yeah.
It's really a play on, I truly believe in the bullish thesis of this company.
Actually, Ruth,
Mm-hmm.
how do you calculate the risk reward in these call options? Like, so let's say in this case, how would you calculate that? Just curious.
that's a more loaded question. Do you plan to trade these options, or do you plan to, I don't know, like what's your exit plan for this?
Probably just long-term hold. I'm gonna hold it until like 2022 probably.
So if you're gonna hold it for that time, right? So you have to look at your trading plan. When do you plan to sell these?
Let's say I plan to sell it like just like a month before expiration.
Okay, so maybe you need to go do your charting, your analysis, or whatever. Figure out by 2022 what do you predict the share price is going to be. So once you have that, then perhaps you can apply, okay, this is how much reward that I'll be getting out of this. And your risk would be, if you really plan to really hold on to these and you don't plan to trade these options, then your risk could just be 100%, right, of this option, which it's hard to say. If you're going to set some stops, like if you're going to set some stop losses, then you cap your risk. So your risk is
Oh,
not
okay.
100%.
Oh, I see what you mean. Okay, so basically the risk is just 18K, the amount you put in for premiums.
If you have no stops and
Yeah, I
you're
did no
willing to
stops.
risk it all, then your risk is 18K per call, right?
Okay, gotcha. And the
So
reward is whatever.
so the
Okay.
risk and reward is what is a framework that you set, you put in place for yourself for this trade, right? So it really depends on where you put your stops. Like for myself, I'm gonna just hold these long term. I don't plan to sell these,
Yep.
so I would put. I don't know it's strange to say this, but I'm gonna risk almost 100%, right?
Yeah, yeah.
I don't know. Like I can't really say that because things could change. Like if you look at the company, if something fundamentally changes, then we have to reassess. We have
hmm
to reassess, right? Elon Musk goes crazy and changes the entire business, then we have to reevaluate. You can't stay still.
hmm Cut at the stocks then, basically.
Yeah, kind of like stocks, right? Like when people ask me when do you sell? That's a tricky question too. Are you trading it or are you really investing in a company? If you're really investing in a company, then there's really only two good reasons why you sell. Number one being you need the money, and number two being if something fundamentally changes with the company. Otherwise, like don't sell.
Yep.
Life happens and sometimes we need the cash. If we need the cash, then you have no choice. So I got a question from Amit. He said, do you plan to write calls against it? It really depends. I think if there's an opportunity that, I see an opportunity for free money, I would. And what I mean by free money is if we get a crazy IV spike, like volatility spike, if we get a tremendous run. For example, when Tesla announced the 5-to-1 stock split and we went up $1,000 on nothing. Yeah, in those extraordinary scenarios where you got such a illogical run up in the share price, huge run up in volatility, premiums are going through the roof. Yeah, I would consider writing a call, against this call. Only if the conditions are just right, I would do it. That would be an example where did this like $1,000 run up come from, right? And the company fundamentally did not change, and you get crazy increase in implied volatility. Definitely do it. And you know what? When the bubble bursts, all of that, then you buy the call back, and then you just essentially got free money.
Yeah, that would be sweet.
Okay, so the question is, what's a high IV spike versus normal? This is different across different companies, different stocks, and also different depending on what's happening in the world too. So that's really something you have to keep track of yourself. Or if you have tools, you can chart your IV. It's just, for me, is anything that's kind of out of the ordinary. If you look at a stock like Tesla, it's got a pretty high beta. So IV on it is typically high. Like on average, I would say is high. But there's going to be times where even that high volatility doubles. The spike, I guess you can define it how you would like to define it. But if you're watching something for a period of time, you kind of can get a gut feel of what is the spike. There's no like technical definition. And like I said, like every stock is different. I trade a lot of AT&T options, and volatility on AT&T is very low. So what's a spike on AT&T would be nothing on a stock like Tesla. So you really have to go case by case basis. And I think the key is you have to really watch something and study something for a long period of time. Then you get a sense of it. That's why like I really discourage looking at so many different symbols at the same time. Like I just can't keep track of it. At any given time, I think my own limitations, I can only keep track of five symbols in my head. Any more than that, then it just messes me up. Yeah, is that a good explanation?
Yep.
Well, thanks everyone for joining. Have a great weekend, and always remember, time is money, friends.
Wonder where you got that one from.
All right, see you guys. Somebody in Gadget Stand.
Exactly. All right, see you, man. Have a good weekend.
All right, later, guys.
Later.
All right.